Stocks technical analysis. The concept of technical analysis states that, based on previous stock price movement and volume of trading, we could estimate the future prices, and hence, investment decisions could be made. In contrast to technical analysis, which depends on historical prices movement, the efficient market hypothesis states that there are no relation between historical prices and future prices. Indeed, fundamental analysis depends on intrinsic price of investment or stock, which depends on economy analysis and company valuation. Under the efficient market hypothesis or even fundamental analysis, whenever there is a new information affecting the price, then the market immediately responds to that to new equilibrium price. Under technical analysis thinking, the change in the price when new information appears is gradual. There are several underlying assumptions behind technical analysis. First, the market value of any good or service is determined solely by the interaction of supply and demand. The supply and demand itself is governed by numerous rational and irrational factors. No matter what are these factors, will be detected and reflected in the action of the market. Due to that, the market is moving in trends regardless of the minor changes. There are numerous technical trading rules, which could be divided broadly into 4 major groups, and these are contrary opinion rules, smart money, pure price and volume techniques, and the 4th group is the unclassified group, which contains a range of techniques. Contrary opinion rules techniques assume that the majority of investors are wrong as the market approaches peaks or troughs. So, the concept here is to trade against the direction of the majority of the investors. Contrary opinion rules monitor the investor trading and cash available by looking at the following indicators: mutual fund cash position, credit balances in brokerage accounts, investment advisory opinions, over-the-counter versus New York Stock Exchange volume, Chicago Board Opinion Exchange put-call ratio, and future traders polish on stock index future. Smart money technique relies on a concept that some smart and sophisticated investors knows better about the market and should be followed. They use specific indicators to follow them, and these are confidence index, treasury bills euro-dollar yield spread, and debit balances in brokerage accounts. Unclassified techniques might include breadth of the market and stocks above their 200-day moving average. Pure price and volume techniques depends on studying market price trend and monitor the volume of trading. One of the most important theories, and earliest as well, is the Dow Theory. The Dow Theory possessed 3 forces simultaneously affecting stock prices, and these are the primary trend, which is a long-term movement of the prices, lasting from several months to several years. The second is the intermediate trend, which is caused by short-term deviations of prices from the underlying trend line. The third is the tertiary or minor trends, which are the daily fluctuations, which is considered of a little importance. Technicians believes that if the stock or industry outperform the market, then it will continue to do so. This is called relative ratio. It's calculated by measuring the price or industry and divide by the market index over a period of time. Another graphical technique used to summarize price data and aid in the identification of trends is the so-called Candlestick Chart. The shaded candle represents increase in price during the day or any specified period, and vice versa. The empty candle represents decrease in price during specified period of time. The highest point in shaded candle represents the closing price. The lowest point in the shaded candle represents the opening price. The highest point in the stick represents the highest price reached during the period, and the lowest point in the stick represents the lowest price reached. For empty candle, the highest point of the candle will represent the opening price, and the lowest point in the candle will represent the closing price.